Our next guest has a buy rating on the shares, sees it as an appealing investment longer term. Darryl McCoubrey is a vice president of utilities and infrastructure equities research at Veritas. Darryl, you've heard some of our coverage of this story today. Tell us about the actual business that is ultimately impacted here. A lot of management changes about to happen and boardroom changes, but what's going on with the business itself?
So some of the groundwork that's been laid by the now ex-CEO has actually started to bear fruit within the distribution business. So at the time of the initial public offering, Hydro One was a business that had consistently underperformed on its returns relative to what's allowed in Ontario. And since that time, they've actually been able to make up that ground. And now it's an entity that is achieving its allowed ROE, largely through cost cutting and productivity improvements. And so the base business that you're buying today, excluding Avista for now, is a business that generates 10% free cash flow yield, of which they pay out half as a dividend, with a growth trajectory just based on rate base and increasing allowed ROE because of higher interest rates, probably in the neighborhood of 6 to 7%, which is above average for the peer group in Canada. Very stable business, entering into favorable regulatory regimes, particularly on the distribution side in Ontario, where they're going to be able to keep cost savings this year and for the next 4 years after, up to 100 basis points above the allowed return threshold that the province has set, that the regulator has set.
And yet markets are highly reactionary, and sometimes utilities are never in the headlines. This particular one is going to be in the headlines for the foreseeable future.
Yeah, and I think it's because the read-through, could be that why was this initiated likely by the board to go and talk to the province to get into this deal. I mean, the simplest explanation is they just didn't want the negative media any longer. It wasn't worth, their effort to potentially lose reputation. But for the CEO, the read-through could also be that there are some challenges ahead. Maybe they're not able to deliver on some of the cost-saving and productivity initiatives continuing going forward that the market anticipates. And maybe there have been challenges internally at the company trying to transition from what was previously government-run to now having private shareholders who are uniquely interested in seeing profits grow, as opposed to, keeping all employees happy and keeping, the different potential political interests happy within the entity. And so that transition can take time, and I imagine it would have been, at times, a frustrating process for the executives.
So you alluded to this a little bit earlier on, but what do you think the legacy that someone like Mayo Schmidt leaves, and arguably some of the board members, if we're talking broadly speaking about management of this business?
So I think for Ontario, they have to look at the process as being relatively successful in that they got very near what the expected proceeds would be from doing this equity offering from the deal. They were able to sell down pretty much what the targeted stake was. I know they didn't sell down the full 60%, which was initially planned, but they came relatively close. And if we kind of think about it longer term, because they've improved the efficiency of Hydro One, because the actual costs they can control have been coming down, they have been trying to directly benefit ratepayers in Ontario. And I think a lot of the noise that's been brought up around Hydro One isn't really under the control of Hydro One, being, contracts for electricity generation, which is simply a flow-through cost for them, transmission projects that they needed to build to support a build-out of renewable power projects that aren't close to where electricity is consumed. These decisions were outside the governance of Hydro One, and so I think they sometimes get blamed for things that aren't truly under their control.
So is it fair to say that your analysis of the business, that a lot of it isn't tied to the management changes or the management team that's leaving, basically?
So I wouldn't say that, because if you like Hydro One, you're essentially betting on the management team being able to continue to cut costs and produce, results that are in line, if not above, what profits they're allowed. And this can drive earnings and dividend growth that would be better than the peer group. As far as the concerns with management, I don't see a realistic scenario where the new CEO, once named, isn't, someone who is supported by the government. because, as you've alluded to earlier, who would want the job if they knew that this opposition was going to be hitting them from day one? And so I suspect what's going to happen is you're going to have unanimous, essentially, support for this new CEO, and that would be good for the stock because it should eventually remove some of these clouds of uncertainty.
How long would you think that process would take? And let's say it takes a year. I mean, for a business like this to not have that resolved for a year, would that be a significant development?
So you kind of alluded to it there. I think the longer they let it linger, the worse it's going to be for all stakeholders involved. And so my suspicion is that they would try to resolve this in less time than a year. And they're already moving relatively quickly, and that they're going to have the nominations for the new board in by the middle of August. And so you'd have to think that the first kind of endeavor from that group is going to be to identify a new CEO.
We did a conversation earlier with a corporate governance expert. We had a clip there, Richard LeBlanc, who made the argument that in this case, the Ontario Premier is playing the role of activist investor, that you are looking at not just what was expected for the province of Ontario, but the compensation packages, yes, for both the CEO and what board members are making. Do you think this example is going to be looked at in that world of what board executives are being paid? Are we going to use this one as a case study?
I don't know if, I guess you could. Here's the interesting thing is if you actually compare it to what other board members and CEOs make at Canadian publicly traded regulated utilities like Emera, Fortis, and Canadian Utilities, Hydro One's compensation for its CEO of just over $6 million would be right in the middle of the range. Low point, $4.4 million that's paid to Nancy Southern in total remuneration at Canadian Utilities, up to a high of just over $9 million paid for the CEO of Fortis. And so it's not like he was like massively overpaid compared to some of the comparative positions in Canada. And with regard to the board, the average compensation that they made of $177,000 last year is actually below any compensation paid to any average board of those three companies I've mentioned.
Interesting. All right, Darryl, thanks for the analysis. We appreciate it.
Thank you.
Darryl McCoubrey, Vice President of Utilities and Infrastructure Equities Research at Veritas.